Hi, I'm Betsy, and this is CAM Matters. Today we are going to be talking about the financials and the reserves. We're going to talk about charging money, collecting money, spending, and saving. Come join us.
Welcome to CAM Matters, Condos, Co-ops, HOAs, and beyond. Betsy Barbieux is an informational leader in Florida on community association living, rights, and obligations. She is an expert on the rights and obligations of owners as well as the association. If you live or are planning to live in the state of Florida, there's a good chance you'll be part of a community association. And by the end of this show, you'll know a little bit more about community associations and why they matter.
Hi, welcome back to CAM Matters. I'm Suzanne Lynn with Betsy Barbieux, and today we're going to be talking about, well, that buzzword that gets everybody's attention when it comes to community association living, money. Mm-hmm. And
money.
I guess it's important because, as you've mentioned in the past, community association living, we're like a business, right?
Exactly, we
need
are.
money.
We're a multi-million-dollar corporation.
Yeah.
And one of the things that corporations have and need is money. Mm-hmm. And that was one of the things that was contemplated by the legislators way back in our history lesson that we had a couple of episodes ago, was, the ability to charge, to pay for the protection of the property, the maintenance of the common elements and common property, and enforcement of the restrictions. We've doing a little refresher here.
Right.
We have a threefold mission statement to protect, maintain, and enforce, and all of that needs money. Mm-hmm. Money.
And you had said there's four segments, four aspects of money.
Charging the money, collecting the money, spending the money.
That's my favorite. Yeah.
But the difficult one is the saving the money.
It is.
Yeah. Okay. That'll be the difficult part.
Kind of sounds like a family budget in a way. Family.
Anybody who lives and breathes, I think, whether you're a corporation or a person, I think those would be the four main things that you need and have.
So let's dive into, you said the first one's collecting.
Collecting the money. One of the things about collecting the money, and I'm going to, again, go back to some things that we've talked about, that our documents create a contract. Mm-hmm. And every owner, when they buy in, have become contractually obligated to all of these. Whether they know it or not, they are a party to a contract. There is a specific piece of this contract. It's called the declaration. It could be the declaration of covenants, conditions, and restrictions if you're a homeowners association, and it might say covenant declaration of condominium if you're a condominium. If you're a cooperative, this piece would be probably in your proprietary lease or your bylaws, would be the ability to charge money. So the corporation can charge owners for their share of protect, maintain, and enforce, which is what the budget is for. So the budget is to be driven by those three things. Our budgets are not to be spent on the spaghetti dinner and social activities. It's for operations and maintenance. For the things that are being used in common is what the money is for. Other groups and social activities, they can raise their own money. They can have their own bank accounts. They should have their own tax ID numbers.
So this is official business.
But what this money is for, that the owners pay, is for operations and maintenance. The different communities will call this money different things.
So like HOA fees.
HOA fees, dues, amenities fees, maintenance fees. The statute calls it the assessment, so that's probably what I'm going to call it. But that's the regular amount of money that an owner pays for their share to protect, maintain, and enforce.
And is it normally monthly? No?
Not always. Not always. A lot pay monthly. Some communities that are very, very small don't have maybe but a $20,000 a year budget, and they might pay one payment a year. Others could pay quarterly, maybe semi-annually, but probably the majority of them do pay monthly. So there's money coming in. There's a lot of banking transactions. If you think about communities that have dozens and hundreds and thousands of owners,
that means millions and millions
that's
of
millions
dollars.
of dollars.
Right.
And just physically processing all the payments that come in. And so the bigger the community, then the more the payments, the more the number of payments there are. So your declaration gives the board the ability to charge for those operations and maintenance. It's the articles of incorporation that create the corporation. It's the corporation that actually collects it.
Okay.
So these two pieces of paper that all of your communities will have will give the responsibility of the owners to pay, and the association can charge, and then the corporation collects.
Okay, let's move into the collecting side.
Okay, the collecting side. Paying, assuming that you pay monthly or semi-annually or annually. The association then will have bank accounts that are dedicated just to the operating account. Your community will also have a reserve account, and we'll talk about that in just a minute when we get to the savings part. You can also have monies spread in different banks, because once you get past that $250,000 FDIC protected money limit, then you might have several different banks.
That makes sense.
Won't go into the fact that you can have it all in one, and there's a way to do it so you're not running all over town.
Call Betsy.
Call me, and I'll tell you about it, because it's really cool
that
you can have all of your money, even millions of dollars worth, in one bank, and it's still protected. Yeah. So that's just really cool. But collecting the money, the owners will pay. If the owners don't pay, then there are mechanisms in the contractual piece, the declaration. There are mechanisms in there that then allow the corporation to start charging a late fee or interest. And then there are mechanisms that are within the other corporation papers and things, and in the statutes that allow the corporation, the community, to pursue collection proceedings. One of the things that all of our communities have by statute is the lien right, the LIEN right.
Okay.
And that is the ability to take your home from you if you do not pay. And I don't really know how much more plainly to say that.
Right.
Even if you have a mortgage, we will take possession of your home after we have gone through a formal legal procedure.
Because you're not pulling your part of being the village.
Yes, you're not doing your part.
Right.
And it seems that the original intent, and I'm just guessing from a distance, but it would seem to me that the original intent of the legislators was that the corporation would always be made whole for every penny that's due to it, that it would always have money to pay for all the things that need to be done in the corporation on buildings and grounds and things.
Well, one weak link, and it throws a budget off.
Yes, and then the rest of us have to pick up the slack.
Right.
You know, and that's, you actually have agreed when you bought that you would pay your share. The statutes have created an ability that if you don't, then there can be some not so severe, but then severe consequences.
Okay.
Other things that can happen could be that your use rights to your amenities, like using the pool, the clubhouse, those things, could be suspended while you are delinquent. It could be, too, that your voting rights could be suspended if you are delinquent. So there are some internal procedures.
Until it gets really big.
And then the external would be the extreme of going through the lien foreclosure proceeding and taking your home.
Okay. I have a feeling that we could do a whole segment on just that.
Probably so.
But let's move into the spending part of money.
The spending part is your budget.
Okay.
And this is the time of year that managers and boards are going through a lot of number crunching to get their budgets complete. A lot of budgets are calendar year budgets.
What are they having to consider when they're doing their budgets?
Oh, goodness. Well,
another whole show.
I was going to say, gee, I should have brought a copy of a budget. The administrative functions, so you would have either management company payments, amounts, contract, or employee. So that means if you've got employees, then you've got salaries, then you have all the withholding, all the things that you have to deduct, all of those things. It could be that you will likely have utilities, telephone, water, sewage, electricity, cable. So you've got a lot of those. Condominiums and cooperatives have a required filing fee with the Division of Condominiums of $4 a unit, $4 a share. That's to be budgeted for. And the homeowners associations do not pay that fee yet. Legislation keeps coming little by little to try to fold them in and have them pay that fee. And let me just have an aside here. That $4 fee that condominiums and co-ops pay goes a lot to legal fees because the Division of Condominiums acts as the investigative authority when condominium and cooperative boards have complaints filed against them. And then the Division of Condominiums investigates. So they've got a lot of
you put
legal,
it that way,
legal department.
and you go, okay, $4 for legal support. Okay, that's a little more reasonable. Yeah.
Well,
makes sense.
but multiply that times what did we
Thousands.
say before,
Right,
like 9 million
right.
people. It's a big.
That's a lot of coverage.
And then there's other things that happens to that money. So I won't go into that either. But the charges would be lawn maintenance, pool maintenance. You will have clubhouse equipment and things that often need to be replaced.
Okay.
You've got, depending on how big your community is, I mean, you could be eternally painting something inside or out.
Yeah.
You have road paving. You have not just landscaping, mowing lawns, but you've got probably miles of irrigation. And I don't know if you've ever tried to repair the irrigation in your own yard, but it breaks every month.
Yeah.
So there's always a lot of irrigation repair. They're always, in condominiums, it seems like we're always patching something.
Okay.
Yeah. There are all of those. Depending on amenities, you could have all of the netting and the fencing around the different tennis courts and other ball courts and things. And
wow, just things you never think about.
If you just drive through a community, someone has to pay for trimming the palm trees, trimming the oak trees. Those have to be done. The shrubbery is probably trimmed at least twice a year, maybe more. And who weeds? How about all of the weeding that needs to be done?
There's a lot of expenses.
All of the mulching that needs to be done.
Sure. All right. Well, I'll tell you what. We've covered charging, collecting, spending. Let's take a quick break, and then we're going to come back to the biggie, and that's saving.
Oh,
and why that's so
that'll be
important.
big.
We'll be right back.
Are you ready for a new career? Do you have skills or interest in management, real estate, construction, maintenance, accounting, strategic planning, project management, budgets, human resource management, lawn and landscaping, pool services, or any other expertise needed to operate a community association? If you do, community association management could be for you. For more information, feel free to email Betsy at betsy@floridacamschools.com or visit the Florida Cam Schools website at www.floridacamschools.com. Florida Community Association Management continues to grow. Career opportunities abound.
Hi, welcome back to CAM Matters. Today we're talking about the money side of community association management. And so we've covered the charging, the collecting, the spending, and it's time to move into the saving.
Savings, yes. And I'm going to go back for just a moment and add to my list of spending. Okay? Think about elevators. Think about repairing those and maintaining those. What about stairwells and railings? How about that? You know,
all these things, they just pop up and they get cleaned and fixed.
You know, chilling towers, air conditioning units. I won't even try to explain to you chilling towers.
Okay.
But, you know, those are all the plumbing.
It sounds expensive. That's
all the sewage. We could just continue to add to the list of what needs to be spent on.
Sure.
So, and then we need to save.
Okay.
And we actually have statutory requirements for how and what to save.
Okay.
We're actually told what to do that.
Is that statewide or is that
statewide?
Okay.
And I don't think there are any statutes for us personally, but
it'd be nice.
It'd be nice maybe if we had some
right.
really strong recommendations of how to personally save. But the statutory requirements for saving are that for condominiums and co-ops, you have to save for roofing, paving, and painting. Those three for a minimum. Roofing, paving, and painting, and anything else that costs more than $10,000 to replace.
That's a lot of things.
And when I think of a bigger condominium association or a bigger cooperative association, when I ask people what would those things be, and they start naming off things like the elevator and the pool and stairwells and things like that, and all I want to say is everything.
Everything.
Because think of all of the equipment in your kitchen if you have a clubhouse kitchen. Think about all of the workout equipment if you have that. What about the pool table? What about some communities have nice libraries and all of the electronics and things that are in those. The carpeting, the drapery, the window coverings.
I'm getting stressed.
There are so many things that you need to strategically save for to replace. The statute has a formula for what that is. And what the statute tells all communities, condominiums and co-ops, is to take you need to know the useful life of an item.
Okay.
So let's say paint on a building, the useful life would be 8 years. And one of the condos that I know about just painted this year. So the remaining useful life would be 8 years at this point. Cost to replace, small community. So let's just estimate that the cost to replace the paint in 8 years is $150,000. And
that's a lot of money.
And
you said a small one, right?
Oh, that's small painting. I think most painting jobs are millions of dollars, but this is very, very small. Then you would need to know how much you already have in that account for the painting, and then you subtract the amount that you have from the amount that you need and divide by the number of years left. And that gives you then a set amount of what needs to be collected from the owners next year. And that will be folded into their assessment payment. So some of the dollars in their assessment payment are actually allocated to the reserves. So those dollars from every check go into an operating account, regular business account, but then they have to be moved out of that account, those dollars do, every month. Otherwise, you think you've got more money in operating than you really have. Yeah. So they have to be totally separated from the operating account and go into their own reserve accounts.
So every dollar's got a name on it.
Every dollar has a name. So some of the dollars are for pool, paving, painting, and then I can imagine that in some communities, the reserve component list has 20 or 30 or 40 things on it.
Wow.
We're required to have the 3. But in bigger communities, there are just a lot of things to save for.
So this is why you're doing these shows, is because there's a lot to be aware of when you're moving into a community association, and spending and money is a big part of it.
And the thing is that as the board is doing these calculations, they are doing their very best to keep those figures low but reasonable. This money is coming out of their pockets too.
Right.
So it's not the board saying, "Oh, we want to take a trip to the Bahamas. Let's put that money in for us." Or we want to, I think maybe I can get myself a new car out of this. No, believe me, the boards, believe me, the boards are doing the best they can to keep these amounts as low, but reasonable and livable.
And functioning,
And we have to still be able to keep water in the pool, to keep the elevator greased up and running, and to keep the sprinklers fixed. We still have to have enough money to do that. And just remember, the money is coming out of the board's pockets too. They're the ones paying assessments also. They're not exempt. No board member is exempt ever from paying assessments. In fact, the statute says that if you waive the assessment for one person, you have to waive it for them all.
Wow.
So board members, if you think they're getting something on the side,
it's not happening.
They're not.
No. I can't think of a better place to wrap the show up, that no one is exempt, for better or for worse. So thank you, Betsy.
You're certainly welcome. Thank you.
Thank you for listening to CAM Matters. Be sure to subscribe so you don't miss any future episodes. For more information, Feel free to email Betsy at betsy@floridacamschools.com or visit the Florida Cam Schools website at www.floridacamschools.com. Information provided on this show is general in nature and does not constitute legal advice. Please contact a licensed attorney for your specific situation.